Welcome to EminiGrid.com introductory video. My name is Leah, and in this video I'll walk you through the components of the eGrid. Here we have a 300 tick chart of the YM on a recent FOMC day. This is a 380 point swing. I'll use this chart to show you the components of the eGrid. Okay, let's get started. The first component I'll show you is the baseline. This solid yellow line is the baseline, the midpoint of the eGrid. Derived from the most reliable data the markets provide, volume at price, the baseline is the foundation of the eGrid. Next, I'll show you the rotational inertia area, or RIA. The dashed gold lines above and below the baseline form the RIA. Derived from compressed volume at price data, this area is a reflection of historical expansion and contraction. The next component is the full market move, the larger light red above and light blue below the baseline. Consisting of three minor moves, these areas often offer first touch fade opportunities, along with support and resistance. They are targets and triggers. Now the minor moves, small red above and small blue below. These lines are action points and not meant to be support and resistance. Though the market will often pause and contemplate its next direction from these levels, the minor move lines are most effective as targets and triggers. The final component of the eGrid I'll show you is the walking baseline. Represented by the dynamic yellow dot dash line, the walking baseline is derived from live data. It offers us trade bias, long entries above and short entries below. Often a first touch fade, the walking baseline also offers support and resistance. Although the eGrid does extend beyond what we see here, this view offers a complete picture. Now let's take a look at the other markets we follow on this same day. One note of importance, the eGrid will only function with the ES, YM, NQ, and TF. No other trading instruments are supported at EminiGrid.com at this time. Feel free to pause the video to study these next few charts. Here is the ES 1500 tick with a 46 handle swing. Next is the NQ 450 tick chart with a 94 handle swing. Last is the TF 300 tick chart with a 27 handle swing. We are seeing a little more of the eGrid than usual due to the large swing. Let's look at a consolidation day after the FOMC event to explore another component. Here is the ES 1500 tick the day after the FOMC event. The bars colored blue are called high interest, meaning institutional activity is likely to have occurred while these bars were being formed. We are concerned with these bars, but not all of them. We are concerned with a very specific one. Which one and why? This one. Why? This algorithm is part of our proprietary information and is coded into our indicator. It will print when the parameters are met. The idea here is long above and short below. In this situation, being below the walking baseline, an aggressive trader might go long with small size and use the eGrid for targets. Let me explain the two walking baselines you may have noticed on this chart. The European close often presents us with a market that has a different feel during and after its close. During European close, you may have one or two walking baselines, both of which are reliable. We'll take a closer look at the walking baseline and other components in other videos. In closing, the eGrid is a unique look into market structure. It's akin to an algorithm on your screen and is a look that no one else offers. The eGrid is a powerful standalone trading style. However, if you have an existing method that could use that extra edge, the eGrid can reinforce your entries and exits. Either way, the eGrid will perform. Thanks for your interest, and we invite you to further explore the more in-depth videos and the screenshots archive on this site. Thank you and good trades.